Before we answer that, Claire, how have they remained immune so far? That side of the market seems to really be pretty immune.
Well, I think we're finally starting to see that crack, Vani. Yesterday, we saw leverage loans on a price basis take a bit of a tumble. And a lot of the sell-off today is also concentrated just in leveraged loan and high yield credit. There's a lot of investor nervousness about that space right now. When you think about it, these are credits where, when they stumble, they have a little bit more trouble making those interest payments.
Yeah, I mean, Claire, even before we had this kind of threat of a pandemic, of something that could really shut in the U.S. economy, we had people like KKR talking about these huge tranches of high yield debt that could be downgraded. On the leverage side, we were talking about kind of worries about covenants and what was going on. The fear, of course, is bankruptcy. The fear is an inability to repay. This is at the top of the pile. So what is the actual kind of fear level here on worst case scenarios for economic downturn?
Right. Right now, we're seeing a lot of the space in the leverage loan fears playing out, particularly in these energy bonds. And that makes sense. We've seen oil really take a tumble. And one of the big fears in leverage loans is just given the covenant-like structures, recoveries could be lower. And a lot of investors right now are really evaluating their portfolios and saying, OK, what credits are we most confident about right now? Maybe they might buy a little bit of the dip there in those names. But a lot of investors I talk to are scared of jumping in a big way.
How about the new deals? We've broken news on several deals worldwide. What's happened there, Claire?
Right. We are seeing a lot of issuers who maybe said, OK, we're going to do a loan refinancing before this volatility started. Now they're hitting the brakes on those plans. One of the biggest ones of note is Bausch, which was in the markets trying to do an $8 billion refinancing package. They have put their $5 billion loan on ice right now, basically just saying, given market volatility, we're going to delay this, maybe try again next week.